Okay, 8:03 while I'm here in El Salvador. So good morning, good afternoon, or good evening, wherever you're in the world, and welcome to March's edition of these AMAs by Blocksquare. And today we have got the topic of security in RWAs. So very, very important topic on the tip of everyone's tongue as well, especially in this climate. I also just want to take just some time out, given the current climate in the MENA region. I know we have a lot of colleagues, friends, and people involved in digital assets in the area. So we do hope for a quick, smooth, speedy recovery. We're all there, hopefully, for Token 2049, and it will be very good for the digital assets industry as a whole for things to improve in that region. Okay, so outside of that, just general housekeeping. We have a great panel lined up today for you. I'll talk about them in a second. But if you do have questions, feel free to pop it on X Spaces, and we will do our best. The team will do their best to get me that question, and we'll ask it during the AMA today. We've got a duration of around 45 minutes, so I will be cracking on shortly. And then, okay, let's introduce the panel. So today, as ever, we have Dennis Pratovchik, the CEO from Blocksquare, Matthew Snyder, CEO from Building Inc., Florian Eber, the CEO from On-Chain Labs, Kevin Unai, CEO from RWA Inc., and we also got Divisco Rossi. And apologies there for my pronunciations on the names. I should be better than that, given my name as well. So we've got a great panel lined up. Really want to thank everyone for joining from the panel, but also the audience. We've got a great audience I can see here today to learn about RWAs and security in RWAs in general. So what I'd like to do before we get into questions is give our panel 1 minute of their time to introduce their project or their business, what they're doing generally in RWAs and digital securities, and then we'll crack on to the questions. So I'll kick off, Dennis, as ever, from Blocksquare. 1 minute to run through what Blocksquare does.
Hi, Mark. Hi, everyone. Thank you so much for joining our space today. Thanks so much for all the CEOs and people from these amazing companies who are joining, because we're kind of all co-creating real estate tokenization and the future of real estate as an asset class, I believe. My name is Dennis. I'm a co-founder and the CEO of Blocksquare. We're a company that offers infrastructure for any company that would like to enter real estate tokenization. We serve them end-to-end with also not only technology, but as well legal frameworks. And to date, we're a team of almost 30 people, so still small, but we've managed to attract more than 200 million worth of real estate assets, and almost 20 different marketplace operators on our infrastructure. Happy to be here and discuss this important topic with everyone.
Thank you, Dennis. Much appreciated. Next up, we got Matthew Snyder from the CEO of Building Inc.
Hello, good morning, afternoon, and evening. It's wonderful to be here, reunited with a lot of fantastic folks in RWA. My name is Matthew Schneider. I'm the CEO at Building Inc. I'm also on the board of directors for Fibri, which is a blockchain real estate organization. At Building, we're working on essentially the information infrastructure for digital real estate markets. We take fragmented property data and we can turn that into structured, verifiable, and continuously maintained asset records. And this supports valuation, compliance, and most importantly, more credible tokenization. We see our role as helping to make these private market assets more transparent, more auditable, and more usable in finance, especially decentralized finance and all the opportunity there. I'll be at plenty of events throughout the year, so I look forward to connecting with everyone along the way. Say hello, drop a follow, let's connect.
Thank you, Matthew. Much appreciated. You heard Matthew. Go follow him on X Spaces, LinkedIn, elsewhere as well, actually, for the whole panel. Next up, we've got Florian Eber from On-Chain Labs.
Hey guys, thanks so much for having me on. Thanks Blocksquare for setting this up and Mark for moderating it. I'm super happy to be here. At Onchain Labs, we looked at RWA and we said, well, actually, if we're tokenizing assets that people want to invest in, we're likely going to target people that haven't, experienced crypto yet. They are, especially if we talk at real estate, it's such a huge market. So many people invest in it, and not everybody who is into real estate is also into crypto. So if we want to target these people, we need to set up infrastructure that these people feel easy to use. We don't want them to already drop off because they have to download MetaMask and then let alone figure out how to deal with gas fees. And so that's where we started our journey a couple of years ago, and built our thesis around that we want to make it possible for RWA to be able to scale beyond Web3.
Wow, thank you, Florian. A product sorely needed in the RWA space. Thank you. And then over to an old friend of mine, Kevin Unai from RWA Inc., the CEO.
Yeah, hi everyone. So great to be here with these great people. My name is Kevin Yuna. I'm the founder and owner of RWA Inc. We are a real-world asset tokenization and investment ecosystem. We have over the last years built quite a large database of investors and help companies tokenize any asset type. And we also have investor platform and all kinds of technology that supports our business. And now rolling out some new license frameworks and a lot of things are happening in our company. So it's truly exciting times, and I'm very happy to be here and speak security today.
Thank you, Kevin. Next up, we got Lodo Ficao, Rossi, CRO from Brickin.
Hi everyone. Thank you, David. First of all, I'm Nicola Rossi, Chief Revenue Officer and co-founder of Brickin. And for those that don't know Brickin, we are a software company in RWA, more than 5 years old. And we are based out of Europe, and we serve globally our clients around the globe. So we offer a platform for those that want to tokenize any kind of assets. We mainly specialize ourselves in financial instruments. And then also we offer the infrastructure, white label API for those that want to join this space and offer this service around. Mainly institutional player or new entrepreneur that are interested in capturing part of the value of this huge macro trend that is finally became a macro trend and finally like a real business around.
Thank you very much, Ludovico. Appreciated you giving us insight onto Brickin. Right, so time to move over to the questions. And we're going to kick off with Dennis first of all. Dennis, great question for you. Many people assume blockchain alone makes tokenized real estate secure. And in reality, the biggest risks often outside of blockchain exist. From your experience in building blockchain infrastructure, what are the key legal, technical layers that must exist to truly secure real estate assets on chain?
That's a good question. It's a tough question, I guess. I would say that there's a lot of things that people in this panel are building that definitely improve the ability to tokenize real estate. And as you said, tokenizing a real estate asset doesn't make it a good investment or a secure one. There's a lot of things that are required for this to be something that is secure. I believe the misconception usually sits more on the legal side than on the actual technological side. And then the fact is that when you invest in a real estate asset, like if you make a direct investment into real estate, you basically are acquiring the title of the asset. And that gives you a certain security, right? Because nobody else can take it away from you except, if you finance it improperly, right? And then there might be a foreclosure happening. But essentially, it gives you control over the asset. And when you're tokenizing or when you're purchasing tokens, the question is, how is the underlying legal structure composed so that it gives you the same peace of mind? And this is a thing that we have been relentlessly thinking of in the past few years at Blocksquare, because we didn't want to just basically transfer economic value on chain in an unsecure way, because that is very risky. If you invest in a token and then what protects your investment is a contractual agreement that then you need to dispute in court if things go wrong, that's a very risky situation you bring yourself into as an investor. You want something that forces the legal owner of the property to actually follow through all the arrangements that have been made contractually with token holders. And if things go wrong, you want to have an exit plan. You want to have a plan B that doesn't hurt as much. And that then makes tokenized real estate safe. An important factor is as well really doing due diligence on what is being tokenized. Not every real estate asset should be tokenized. In fact, I would say that most probably only 5% of everything wants to be tokenized should be or could be even. And so this due diligence process is something very important. And thankfully, there's more and more tools around that make it easier and easier for conducting due diligence pre-tokenization, but as well providing information or digesting information once the asset is tokenized for anyone who is doing their own research before purchasing tokens. Now, if we go back on the structuring part, there's essentially two routes we've seen taking the main stage in terms of how real estate is tokenized. One is tokenizing ownership in an SPV that owns a specific real estate asset. So that's the first most straightforward form of doing this. However, it's limited to only specific jurisdictions because in many places, it's not possible to simply tokenize equity. And so what happens is there's SPVs that get incorporated in jurisdictions where this is possible or economically viable, and then you become a shareholder through the owning of a token in that SPV. And that's as well, I would say, quite risky because you're always investing in a foreign entity, even though the asset might be, next door. And so you're basically investing through a foreign setup, and it requires you to understand the laws in that country. The other route is what we focus on is the tokenization of economic rights that derive from ownership of a real estate asset. The ownership doesn't change, so the full bundle of rights stays in the hands of the property owner, which needs to be a corporate entity, a legal person. And that legal person, the shareholders of that company, basically execute a corporate resolution, and through it, they give access to the economic rights of the asset they own, or a bundle of assets, to whoever holds tokens. This is a different setup that essentially it's much easier to execute, but it gives the token holders like the top line revenue access, not bottom line profits and co-participation in an SPV. So it's much easier to understand because it can follow laws within the country that asset resides. So, if you are based out of, Belgium, and you're investing in a property in Belgium, you're investing through a setup that is set up in Belgium. And that makes it much easier to understand to local investors. On the other hand, we also have this notarized framework that comes before at the issuance time of tokens, which basically achieves the following. It collateralizes the tokens with a charge on the title. So basically, you as a token holder get the same security measures or the same security package in a way as a bank would when they give out a loan. And this means that if things go wrong and you need to follow that plan B, you still can recoup a portion at least, or maybe even in full, the value of your initial investment. And that's, I believe, very important when it comes to evaluating how secure, how risky an investment is. Because in the end, investors expect risk-adjusted returns. And the higher the risk, the higher the returns need to be. And when we are talking about DeFi and crypto and Web3, real estate, tokenized real estate is always competing with all these other products that, yes, have a higher risk usually, but also have higher returns. And the problem is when low risk yield products in DeFi provide the same returns as normal real estate would. In that moment, nobody's going to invest in tokenized real estate, but everybody will shift their capital towards these low risk products that might yield 7, 8, 9% per year. And that is directly competing with tokenized real estate. I believe we're now entering a stage of the market evolution where these yields are not so much present anymore. You don't see them around DeFi anymore so much, and these juiced up yields are slowly fading away. And now investors need to rethink their strategies on the market and start thinking more in a traditional finance way than ever before. Because, just buy and hold strategies are almost gone. The strategies of lending to, stable coins, to lending protocols are fine, but, 1 to 2, maybe 3% per year doesn't sound very interesting anymore. And so it's really important that in this time, that we establish strong foundations for tokenized real estate so that this capital that will be seeking yield that real estate assets can offer can be deployed in a secure way, because that's the future of the market we're in. If we're not doing this carefully, that market will not trust us anymore and will go down the road of meme coins.
Thank you, Dennis. Really interesting insight onto real estate tokenization. Interesting, Dennis, also about Blocksquare's view on the SPVs and really pushing towards economic rights. I can second that as well. Across the industry, the typical norm is SPVs, but I think you bring out, especially for the audience, what Blocksquare are doing differently and differentiate through the market. Do you, just before you go, I don't want to let you go. So do you see other participants going down this route as well?
I think it's, in the end, we're going to see where the capital is going to form around which protocols or frameworks, and what the outcome is going to be. I think there's going to be, there's quite a lot of testing the waters right now. And it takes a bit of time, but it's going to formulate around a specific recipe. And I think larger investors, institutions might always go down the securitization path. That's a product that they know. But on the other end, a more retail to professional, maybe high net worth individuals might look at alternatives, because managing portfolios of tokenized shares in SPVs, where you need to really be involved in the management of it, is a full-time job.
Yeah.
And most people are investing passively as a side thing, and not their primary profession.
Definitely, and for the issuers, they've got the additional burden of paying for the SPV every year, and depending where it is in the world, they've got all that legal headache. So definitely, thank you, Dennis. Great kind of overview and discussion on that as well. And as Dennis mentioned on the yields, very true. I'm seeing that through and through, especially on real estate. The 7 to 8 norm for tokenized real estate is coming through, and people are focusing on the product versus focusing on, hey, actually, can we bump this real estate RWA up to 10, 12%? So Dennis has really hit the nail on the spot there. All right, next up, moving on, we've got Matthew Snyder. Matthew, are you there?
I am.
Great. Got another great question for you, so I hope you're ready. Real estate transactions are heavily dependent on fragmented documents and inconsistent data. So how does structured verifiable property data improve trust and security for tokenized real estate markets?
This is a very good question, and I get to build off of a lot of what Dennis was talking about. Dennis, thank you for a great first portion of this discussion. So I get this question a lot, and it's been an elephant in the room. So I'll open with saying that what's going to improve trust in tokenized real estate is not the tokenization itself or the tokenization alone, but if we can build a stronger information architecture beneath that asset. And a quick recap again of what building is doing. We're building that information infrastructure beneath the assets. What do we know about this? How do we price this? How do we assume the risk or calculate the risk? If we were to look at private markets today, private real estate is still very dependent on fragmented records, very periodic diligence, and there's this issue that we're constantly reconstructing data, and that's what makes pricing, underwriting, compliance, makes it all slower, makes it more expensive, and a lot less transparent than we think it ought to be, especially if you look at if public markets are your comparable there. So the first requirement, if you understand how capital markets works, is you need structured data. You need information to be organized in a consistent, machine-readable manner. And then you also need verifiability. So not just data itself, but verified data. Think like records that can be traced. Can this information be traced? Can it be audited to some sort of source evidence? Can we check the integrity of that information? And are these records, these documents, these data sets, is that being maintained over time rather than trying to piece it together over and over again, piece it together along the way? And where blockchain becomes strategically important in this is that it changes how trust is created for those documents and data sets. So once asset data is cryptographically attested, we call this the digital fingerprint, a hash, an anchor to a blockchain, cryptographic attestation. What happens is you can have multiple parties, multiple participants in the market that can independently verify the provenance, the integrity, and the state of that data on a shared layer, and the shared layer is the blockchain, rather than falling back to a single intermediary or a central authority. So we can independently verify that information instead of having one authority that is responsible for all of that. And this architecture, and I'm using that term sort of abstractly, I know we're talking about real estate, but how we design how the data is managed, this allows different players in the market to process that data in parallel, rather and data process that for valuation, for compliance, risk, reporting, whatever that is. And it's all tethered to the same underlying asset data rather than having some sort of asymmetry where the data moves between parties and there's this constant game of catch up trying to figure out what do we know or not know about an underlying asset and what is our exposure, what's our risk in that situation. When we use blockchain in this way, it makes digital instruments, which exist without tokenization, but when we put the digital instruments on blockchain, they become tremendously valuable, especially if it's backed up by blockchain verified records. So as Dennis was alluding to, instead of just having a digital wrapper around ownership, if you can correlate the token or the digital instrument to a dynamic verified asset record, dynamic verified asset performance and health, as that asset changes and as the record updates, what happens is the market becomes in a better position to assess condition, performance, risk, and to start to make decisions off of that, to buy, to bid, to sell, to collateralize. If you don't have those updates, that itself is a huge risk and can actually reduce the price of the asset. So it's not just that you have continual updates that you're looking for in order to assess the condition, but if there's an interruption of that, that becomes an issue in the market as well. And if we look at the implications of this across the market, when you have standardized and verifiable data across many private assets, those assets are, or could become at least, comparables to one another. So they can serve as what we call observable inputs for each other into future valuations, rather than just pricing an asset based off of speculative assumptions, internal models, information that might not be up to date. You're looking at other transactions in the market in real time in order to price your real estate, apples to apples. So going back to the beginning of the question, you're improving trust not only because one asset is better documented, but the entire market gains a credible foundation for comparison and price discovery, and that's incredible for private markets. I'll comment, this is really important for private markets. So public markets, we can think of the major exchanges. Private markets, that doesn't exist. This is why you have tokenization popping up, and there's these boutique exchanges, these marketplaces that are performing their own diligence. Private markets don't have a central checking authority to validate, to audit. There's very basic paperwork. And so if we have no structured or verifiable inputs, it's very difficult to price assets accurately, frequently, difficult to trust the pricing of adjacent assets. And so if we approach this correctly, we expect that private markets will move from the episodic, opaque operations that they are currently and very akin to public markets, where there's continuous risk assessment, there's continuous prices. It's always calling back to some sort of real data set that is to inform that price. I'll wrap it up here. Looking at my notes, I'd say, we can't assume that just because there's the presence of blockchain that we can trust the asset itself. As Dennis mentioned, just because something is tokenized doesn't mean that it has investable qualities. But I would say if we include blockchain as part of the greater digital transformation process, so digitizing records, documents, data sets, standardizing those, making them machine readable. If you have cryptographic attestation, if we have credentials and verification, attested parties, if everyone in the market can see those attestations, or if they have the ability to access the data when it makes sense, if we can process the data, this is where tokenization is not just, can we list a new offering, but it is legitimately transformative to how markets structure themselves and how we will price assets, how we will understand them, how we will compare them, and then ultimately in real estate, most exciting of all, how we build buildings. But it all starts with data, as the question asked.
Matthew, really, really interesting, especially around property data. It's not really covered off that much, so I'm glad we managed to get it on this AMA space because I think it's very interesting, especially the amount of thumbs up and hearts I saw during your talk. So definitely, if you're interested to find out more, please follow Matthew on LinkedIn, X. Also go check out building.inc. Very interesting information on their solutions. And I'm sure Matthew will catch up with anyone one-to-one if needed. So feel free to reach out to me, Blocksquare, or directly out to Matt, and we'll put you in touch. Next up, we've got Ludovico Rossi from Brickin. Right, got a great question again for you. The questions are just rolling off my tongue today. Many companies want to tokenize real-world assets, but struggle with compliance, investor protection, and distribution. Yeah, the whole chestnut distribution. From your perspective, working with issuers globally, what is the biggest security and regulatory hurdles companies face when bringing assets on chain? I can't hear anything. I'm just going to double check if you're coming through.
He probably dropped off. This happens sometimes, and then he got booted off the speaker position, so you need to re-invite him. Or I guess he needs to re-request.
Great. Okay. Let's give it a minute. Otherwise, we'll move on and then come back to... I'm just going to ask my team if they could accept Ludovico. I don't have access at the moment, unfortunately.
Hi.
Hi. Are you back? No. All right. I think we're having a few technical difficulties. So what I'll do is I'll pause on Ludovico, and whilst we get it... Oh, he's back. Okay. Ludovico, can you hear me? Yeah, unfortunately,
Hi.
we
Can you
seem to
hear me,
have
Mike?
technical Oh, yes, I can hear
Okay.
you.
Okay.
Can you hear me?
Okay. Yeah. I don't know what is happening. I hear you perfectly, but my mic is not working, or we have some technical
No, no
problems.
problem. I think this is a good example.
Apologies to everyone.
No, it's a good
Yeah.
example for X or X Twitter to get this on the blockchain so we can verify.
Exactly. The proof of talk and the proof of
Yeah,
connection.
let's get Blocksquare to get this on chain, and then we can get Matthew to verify the data that everyone's talking about that is actually real. Anyway, let me just repeat the question. So many companies want to tokenize real world assets but struggle with compliance, investor protection, and Ludo, the old chestnut distribution. From your perspective, working with issuers globally, what are the biggest security and regulatory hurdles companies face when bringing assets on chain?
Okay, good question. So as I was saying before, I'll try to. I was saying that, nowadays we think that, with all the legal frameworks around the world, it's easy to tokenize, no? It's something already clear and, easy to go, no? We do have, this setup really in Spain that is really cheap and quick. But around the globe, in many jurisdictions, it's always taking more time. Okay, so even if we are receiving, I think all of the players here today are receiving, an increase in demand, and also like many different kind of tokenization. So the demand is all over the verticals nowadays, not only real estate, right? We started with real estate, was a good promise, let's say, for startups. But nowadays we have institutional players, we have funds, we have any kind of size of company that is trying to exploring this environment and this way to actually get access in an easy way to liquidity, no? And give access also to the holders and liquidity to those in the secondary market. So, how do we face these problems, let's say, is, we position ourselves as a software provider, and then we really partner up with the best law firms out there in every jurisdiction. So we try to build like strong relationships out there. And once we have it, then we can guide our clients in tokenizing their own assets in that jurisdiction. Every regulatory framework is always using this, let's say, this way that to protect. They say that they want to protect the investors. In reality, they are just complicating things a little bit, in my opinion. But I do understand that we have to protect the investors, of course. In that way, there are different ways to do it, and that depends on the jurisdiction, usually. So it's really important to study the legal framework and also like reading among the lines, between the lines, to really understand what is possible to do or not, because everything is designed to issue securities, and it's the most regulated asset. But not everyone wants to issue security. So if we take the example of the real estate, for example, I mean, it's not the same like a huge hotel or development project in Bahamas, or selling like something that is working maybe here in the center of Barcelona, right? Of course, the target of the investor is different, but I mean, we should give the opportunity to have access to all these assets to everyone, in my opinion. Then I agree on what was said before about data, that of course we will need more data about the assets, because today it's true that everything is registered in front of the regulator. Of course, the legal contracts are embedded in the metadata, and that's okay. But then when the value of the asset is fluctuating in the real world, should also be reflected in on chain, let's say. So this year I foresee really the data playing an important role in this sector. And also, for example, we are integrated NAV now that we are starting to work with funds in general. So today I have to say that, I mean, the big players, they struggle less because they have more money. They can structure better the products, and still the SMEs, let's say, they have difficulties in issuing assets. So this is more or less, well, just to conclude, what I want to say, that, I mean, it's still like kind of expensive depending of the jurisdiction and the kind of asset that you want to tokenize and issue as an instrument, financial instrument. And in that case, is where you have to follow or not certain rules to protect those investors, right? So, for example, in Europe, it's really limiting when you think about retailers, because, I mean, the retailers are not welcome yet, let's say, in this game, because, I mean, you can limit it only and allow only 150 investors from a jurisdiction, right? So it's really limited. But at the end of the day, I mean, we also see like all the sector becoming more and more mature, and also the barriers are decreasing. So actually everything is professionalizing. So this is good. We are having better quality tokenized assets on chain. This is definitely good. And let's see how in the future we can involve more competitors, more retailers, let's say. But in this case, the game so far is just for the institutionals and deep pocket, let's say, outside of Spain. In Spain, we can offer like a different kind of prices and entry points, of course. But of course, also the public registry, when you want to register the property, is not aligned yet on the technology layer and getting those information straight away. So it depends. I mean, there are many things evolving. I think that in Italy and Spain, the things are really clear. And again, especially on the securities side. So the concerns that are at the end of the day more the legal aspects more than technical. The security is covered by the service providers like us or all the gentlemen in here. And yeah, again, it's more a legal game than a technical one.
Thank you very much, Ludovico, especially from our friends down at Brickin, Edwin and Co. It's great to hear from you. Great to hear your perspective. I think, Ludovico, if we come back on this Blocksquare AMA in a year's time, I think we're going to start to see a real kind of difference in the market space that you called out as well today. So definitely
Absolutely.
interesting. So, yeah, please follow Ludovico on X Spaces, LinkedIn, and also visit Brickin's website if you're interested. Of course, all of our attendees today and our hosts, Blocksquare, definitely give them a follow-up as well. Now, on to a very interesting topic. I've been looking forward to this. Over to Florian Eber from On-Chain Labs. I think it's one of the missing pieces in the jigsaw puzzle for RWAs and digital asset as a whole. Florian, welcome. Even better question for you. So for RWAs to reach mainstream adoption, the infrastructure around wallets and execution must feel, as you said, as simple as and secure as Web 2. So what role do wallet infrastructure and RWA operating systems play in making tokenized assets both usable and secure?
It really is a good question. And, security obviously is always a must. From start to finish, there are no shortcuts. You cannot compromise on that. Otherwise, you will eventually get yourself into trouble. So then the next question is usability, because if you have to prioritize security, okay, sure, you're going to have some limitations in usability. And that's where we said when we started building our infrastructure that we don't want to accept mediocre usability for the sake of security. And the way we look at the RWA world, or actually the blockchain world as a whole, is that the wallets are ultimately the interface that we all use. Like the wallets is how 99.9% of the people interact with the blockchain. There's not many people that actually work directly on the blockchain. So the wallet really is your middleware to your assets and to experience your assets, to actually know what they are, to know what value they have, what's the underlying asset. And when you build that wallet, you want to make sure people actually know how to use it. And that's where we said we have to go back to Web 2, because that's where people know how to interact with a website. That's, we got used to certain standards in, let's say, basic web development. And so when you think of the wallet being your interface in the RWA space, it really means that the wallet actually becomes like your brokerage account or your banking app. And so I think this is where we need to start when we want to build an RWA platform that can really be ready for mass adoption. And so I went to my team and told them, hey guys, we have to build a wallet that's like not only super easy to use, but actually it's going to have the UX of Web 2. And thanks to quite a few advancements in the blockchain space in the last 12 months, there are many ways that you can create MPC wallets that are completely embedded in your browser, and that don't have the same experience anymore that like most of us probably are still familiar with. Like, for me, and I'm sure most of us here on the using MetaMask and Ethereum is second nature. So we feel comfortable with that kind of setup, but what most people struggle with, when they come in the RWA space is when they have to deal with all the complexities of the blockchain.
I think we may have lost Florian. Let's just give it a minute or so for him to come back online. Still with you guys. If you can hear me, give me a thumbs up, and I'm gonna get Florian back online. He's coming. It just should be a minute or so. Okay, bear with us.
It's great. I got rocked by the app.
Great.
You guys hear me again?
Yeah, can hear you. Are you
All
back?
right, sorry about that.
No,
Where did I cut off? Because I was talking happily and having
I,
my speech here.
honestly, I'll tell you, it's not me. And I think, look, let's sync up with Matthew after this call. We want to kind of get this verifiable data on us talking on X Spaces in future. And let's see if we can bring this fully on chain. There must be something going on. But
No, it's like I've been to many spaces. It's always a challenge. It happens. Yeah.
all right, no worries. Look, let's pick up again, and
Sure.
because it's a
Yeah.
really interesting topic.
Yeah, I actually don't know where I got cut off, so I'll just continue my rant on why it's so important to have a wallet that actually allows you to interact with your assets and the items that you bought. I'm gonna call them just items, whether it's real world asset tokens or any other token, doesn't really matter. But the technology in the blockchain space, especially in the last 12 months, has advanced so much that with MPC technology, you can set up wallets that really make it feel like you're actually in a Web2 platform with an embedded wallet attached to it. And I think this is really what we need to move towards in the RWA space, and especially in the real estate tokenization, is to set up these platforms that have the RWA tokens attached to it, but the platforms themselves is just going to be a web platform for people to log in and to manage their ownership, and to see their payouts and to see what's happening with the assets underneath it. And this is how we can draw in more people. Because what's really interesting and what's really going to drive adoption and also more interaction with the platforms is when you create an experience beyond just a token in the wallet. So, like, what happens when you hold a token in your wallet? Right now, it's just a number on a screen. But if you have a platform that actually gamifies that experience and that makes it possible for you to see, some interactive diagrams about the tokens that you own and why you receive the payouts that you receive or whatever is happening around your token, this is how you can make the experience of owning RWA way, way more interesting. And that's when you get out of that whole, oh, it's crypto and it's probably just a scam anyway kind of area, because you make it possible for people to get immersed and to get drawn in, and it almost becomes like a game. And this is why we built that middleware, because we feel like if we want to make it an experience and make it fun, make it something that people can actually understand and grasp, then you need all these different layers. And obviously, what Matthew said is super important, to have the transparency of all the documents around it. And so I think if we all combine what we're building right now, at the end of the day, we'd have a really, really cool ecosystem. And it just goes to show how early we still are, right? There's still so many different layers and different infrastructure pieces that are needed. And ultimately, all of us together will create one huge puzzle that makes it a lot of fun and very efficient and also economically viable to tokenize the assets that we can tokenize. And I also agree with what you guys said at Blocksquare, right? That is, Dennis, you said it nicely, not every asset is made for tokenization. I think that's also super important to keep in mind. But yeah, at the end of the day, I'll just wrap up here with, what we're building is an on-chain financial infrastructure. Whether we call it tokenization, call it RWA, at the end of the day, we are putting the financial infrastructure on chain, and with that, we're creating digital products. And digital products, people already know how to sell them. It's nothing new. We don't have to be in a crypto bubble and just cater to crypto people for this to work. And I think this is what's going to be so exciting over the coming months and years when we figure out how to really go mainstream with RWA.
Awesome. Thank you, Florian. I think really interesting topic, and I'm going to be following you guys very, very prominently, because I think if you do push that forward, it'll be a product that's really taken up in the industry across a lot of peers. So good luck, and I'd like to see how this develops over the next year or so. Great. Next, we've got Kenneth Unai from RWA Inc.
Yeah.
Kevin, good to speak again. So
Likewise.
got a final question for you, so I'll make it as hard as possible. Luxury real estate developers in regions like the GCC are increasingly exploring tokenization. What security and compliance expectations do institutional developers have before they are willing to bring assets on chain? And how do you assess the quality and credibility of property owners before allowing the assets to be tokenized?
Yeah, it's a great question, and really we see a lot of demand, especially from that region. We see the regulators in the region doing all kinds of, you can say, experiments and also sandbox projects to really find out how do we create actually security for especially the retail investors. And when we speak security in general, I agree with all the speakers today on all the elements of the security implementation, from the cryptographic security to, you can say, the security of the SPV and the legal structure and the legal security around the whole thing. And I think it's important to mention that also the governance is super important to have, you can say, control of all the things that happens in that SPV that has been due diligenced. Because what use does it have to have all the security in place if the governance is not controlled? If, you know, the funds can be transferred without multisig in a Fireblocks wallet. So security is a very big theme and something that has to be, in my opinion, implemented and deployed all the way to personal guarantees almost from the founders and the shareholders in that SPV and the managers. So it is a big topic. And when we look at what do the clients, what kind of security do they want? It's actually, of course, given that they want, you know, the tokenizers to be licensed. That's why we are very, very focused right now on getting all our licenses in place. But it's also a security of success, actually, because you can have the best tokenization project, you can have done everything right, you could, you know, have the audited smart contracts and all the logistics in place. But what about the buy pressure? What about getting those people to invest into that asset from anywhere they are? So how do you guarantee that success? So that's actually what we have done. We have turned it a little bit around and said we need to first and foremost focus on the buy pressure. We need to create the databases, the demand, the partnerships globally to actually bring real buy pressure towards the assets. Because in the end, it's the financial success that is the most important, and you can say the security of being a success that is important to us and to the client. So that's where we are very, very focused, building that global network. I think we have more than 1,000 integrations now to various platforms to really come back to the real estate developers and asset owners and say, not only do we have all the security in place, but we can also guarantee you that if you go with us, you will have some kind of success together with our great partners. So I will say that it is expected for the tokenizers to actually also deliver on the monetary part of the delivery. So it's a lot of responsibility. And how do you, as a tokenizer, guarantee the buy pressure? That becomes very difficult, right? So you really have to navigate, and you have to really, you can say, be part of a great ecosystem. And that's what I love about Web3, that all our speakers here know each other. We work together, we white label each other's solutions, and we, you know, go strong to the clients together. Some are good at wallets, some are good at other parts like smart contracts, some are good at, you know, the front ends and how to onboard the client successfully. Some are good at KYC, AML, and we put it all together and we go to the market in great partnerships. So that is what we have built and we're very proud of. and what we can see is working on the market.
Thank you so much, Kevin. And I think for the listeners, please go out, check out RWA.inc and follow Kevin. Kevin, if you just hold on a minute, I know we're running out of time, and I just want to make sure that we round up and give everyone kind of a 1 minute finish, even though you just finished up your session. Kevin done me a great favor. I think he summarized this whole AMA today for security in RWA. So thank you, Kevin, for doing my job wonderfully well.
Thank you.
I don't regret it,
it's always a pleasure to be in your AMA. So anytime we will always join.
Yes, no, appreciate it. And as Kevin mentioned, we're all friends here. We're peers in the industry. Yes, some of us might do similar stuff, but we all work very well together behind the scenes for the betterment of the industry. Kevin, look, before you go, if you could just give a 1 minute finish for RWA.inc, and then also just to leave you and the other panelists as I come on to them with a question as well is, just really quickly, what's the missing piece in the RWA industry really that must be solved to build global trust?
I know all my followers are bombarded with my AI posts these days, as I believe AI is a very, very important element in general for how we need to transform as businesses towards this new reality. So we have spent a lot of money and a lot of time on actually bringing AI to be a part of everything we do. Also, the compliance, we have built entire compliance engines and legal engines. So we really think that AI can be a very, very useful tool and something we as industry also must welcome. So we have put our force in implementing those agents and that making that work, which has been at times very, very hard. Because AI is a new technology. It is a uncontrollable technology in some ways, and it has a lot of hallucinations and all kinds of other great issues that needs to be handled. But I would emphasize that the AI combined with blockchain is a very, very powerful mix, and I think that is what will make the industry even stronger, and we can see it already happening right with the new bank plays.
Definitely, Kevin.
So that I would emphasize for sure.
Definitely. Thank you, Kevin. Appreciate it. Going to Florian now. So final thoughts in 1 minute in obviously on the conversation today on Chain Labs, and also if you can fit it in, what do you still think is the biggest missing piece in RWAs?
Yeah, as you know, I'm super passionate about making RWA more accessible for retail investors. And I think the missing piece here is the combination of all the different services, like I mentioned before. And that was kind of an epiphany moment that I had right here in this space. And I feel like, even though, like you said, we're all friends and we all see each other at conferences, we all try to support each other. But maybe there is still more that we can do to actually advance this industry and to get more people to join what we're creating, because it's really cool. Like the types of products we can come up with and the accessibility of it all is pretty amazing. There are some opportunities that will be life-changing for people here.
Awesome. Thank you, Florian. Ludovico, over to you as well. Same question and wrapping up in a minute.
Yeah, so I'm into data. This year, if we really want to accelerate, RWAs and making it like an appealable asset for investable asset for everyone, we should really bring on chain the data with the oracles that are bringing, for example, the live value of a real estate in Dubai in this moment, for example. So I think data will play a major gap. It will solve a big problem in this sector this year.
Awesome.
And I'm totally into the future, into agentic AI and tokenization, but this is another topic for next time.
Yeah, definitely. Thank you. We're getting the topics lined up. Could be the next one. Over to you, Matthew. Same question, and wrapping up in a minute.
Yes. The biggest problem in tokenized real estate is also the biggest problem in real estate itself and construction, which is data. It's the presence of data, being able to interoperate with different software systems, having it ready to go, that you can trust it, that it's being updated. And this is very contingent on a lot of real world operations. You need people to do their jobs, to document that they've done their job, to upload that to the right place, to hope that we can extract value out of that data, that we understand that maintenance was done, that units are being leased. And then once all that becomes value, that an Oracle picks that up and puts that on chain. So it's sort of a domino effect, you can imagine. So I think that allowing the real estate industry to catch up a little bit is going to, if that moves an inch, real estate tokenization will move a mile. So I'm very excited about that. Happy to collaborate with everyone here. We're all talking about data, ecosystems, working together, plugging in different solutions. I'd love to see how we can elevate the real estate that folks are working with, help prepare it for digital markets and tokenization, and allow 2026 to be a fantastic year for assets moving on-chain, not just in representation, but in true activity, unlocking that value.
Awesome. Thanks, Florian. And I'll speak for everyone else. Yeah, definitely. Let's all work together on that. And then finally, but not least, Dennis, CEO of Blocksquare, your final thoughts as well on that question.
Thank you, Mark. And first of all, I really wanted to thank you, Mark, for a great job in today's AMA. I hope everybody enjoyed in the discussion. I also want to really thank Julia Buchholz, our CMO, who put so much effort and time in organizing these AMAs. And so thank you so much. I think it's been a great conversation. Thank you, everyone who joined, being on the same stage with so many smart people working in the same space. I think it's just amazing. Also for me, I think to wrap up from my end, I think in the end we just need to convince. We need to convince not just asset owners to tokenize. That's what we're really working on for the past decade, is to bring tokenization to solid asset originators, if you will, that have a good product, because that's the prerequisite of any market. You need to have a good product. But on the end, as many mentioned, we talked about data. We need to bring information in a digestible way to the capital that wants to be deployed around, and we need to create models that make it very easy for people to, and funds and investors in general, to dip their toes in tokenized real estate and become addicted to it. You need to become addicted to tokenized real estate, just as you are addicted to real estate, because when you start making investments in real estate, it becomes fun. It's something that grows. It's something that yields. It's something that is constant. It's something that gives you prosperity and safety, and it gives you a nice life in the end. And so we want to share this. We need to share this with whoever wants to take part of this asset class. That's our mission here. And I think we really make it easy for anyone to access this and start loving it.
Thank you, Dennis. Much appreciated. And I appreciate the kind words. Much appreciated, and also second the comments about Julia. And I think worth a brief mention, without the team here, Blocksquare, Dennis, Julia, and Hassan, working behind the scenes. Look, I'm just the face of this. A lot of the work and effort, as Dennis mentioned, comes from Julia and Hassan on the team. They're ready to back up. But thank you very much for trusting me to moderate this. I really enjoy it. It's probably one of my favorite AMAs to do. My day job is, let's just say, back to the normal RWAs commercial director at Valerium and CEO of Mytikuti blockchain. So this really gives me an avenue to talk about RWAs with all the peers in the industry. So love working with the Blocksquare team. Now, please go and follow Blocksquare on LinkedIn. Please follow Dennis, Julia, and Hassan as well. Check them out on X Spaces. It's your way to follow up for the next AMA. You can also input on potential topics, so we'll throw that out also to individuals. If you want to hear a certain topic, fire that on X Spaces. Julia, myself, and Hassan will pick that up. We've got a range of AMAs coming up this year. I think a lot of interesting topics came out of this AMA, so we'll be scheduling them hopefully sometimes twice a month. So there is your signal. Go join up and follow everyone on LinkedIn and X Spaces. Right. So good evening, good morning, good afternoon, wherever you're in the world. Please stay safe if you're in the MENA region. And yeah, actually on that note, if we do make it to Token 2049 and you're listening, look, we'll be very welcome to meet you for a quick coffee, whether it's in the conference or whatever. I'll be there. Some of the team will be there as well. And some of our panelists, no doubt, will be there. And as ever, please get in touch directly. I'll put you in touch with whoever you need to. Great. Take care. Good night. Good morning. Good afternoon.